Welcome to The Point. I'm Neil Stanley, and this is episode 15. We're going to talk about time deposit strategy and how it still matters. Today, there are many financial institutions who are thinking that historic low rates mean that they can check out away from long-term deposit strategy. They can just check it off their to-do list, but the data suggests otherwise. So today we're going to look at how those assumptions need to be verified by the data. We're going to look at financial institutions that are currently paying over wholesale funding rates, what the Uniform Bank Performance Reports tell us about the distribution of results, and we're going to compare all of that to the core CD client results, both with UBPR and with the new and renewed performance results that the core CD clients are generating. What we know is that when it comes to interest rates, when they're very low, which one is true? Is it true that it all comes out the same regardless of strategy? Or does it mean that strategy always matters? So today let's look at the data. How many financial institutions are paying up for CDs? If we look at S&P Capital IQ, we find that if we check out as of August 11th, those financial institutions paying more than FHLB in Des Moines for a one-year CD, 36 basis points, what you'll find that 1,767 financial institutions were offering rates above FHLB. That's interesting in a season where we have a glut of deposits. And then when we look at the Uniform Bank Performance Report, we find that there is for the second quarter, we find that the median rate for time deposits is now for portfolios 93 basis points. The average trimmed by taking the small and high rates off and averaging 94 basis points. So that's our metric to compare. And of course, we can see a variation from very low to quite high interest rates for the second quarter. So this UBPR, we can take this now and compare it to the core CD client portfolio for the second quarter. So we've taken the core CD financial institution subscribers, and we looked at what their median is, 72 basis points compared to 94 for the peer. That means that the core CD banks as a group are in the 34th percentile. They're 22 basis points less cost on their portfolios than the industry peer. One would think that with lower rates, there would be compression and it would be harder to set yourself apart from the industry. That's sort of the assumption that we make, that low rates sort of make everything come out the same. But we find that's not true. When we look in June of last year, we see the differential between core CD banks and peer was 11 basis points, and it's grown each quarter to now 22 basis points is the differential between the industry peer and the core CD banks. Very important to note that that much impact is occurring where we were 11 basis points below peer median. Now we're 22 basis points below peer. The other thing I want to emphasize that since we began producing core CD subscriber results, we now have a scorecard that everyone can measure against. And so we report this in the monthly results for our core CD clients who submit data to us. And what we want to identify here is that the rate is the weighted average of all new and renewed time deposits booked for all terms in the month reported. The spread is the spread for coterminous FHLB Des Moines advance rates weighted by both dollars and term. So with this data, it's very easy to see directionally where you're headed. So we can see that our clients are headed towards a 30 basis point portfolio cost if they just keep repeating over and over the results that we saw in July. So going from 72 basis points down to in the 30 range is the direction we're headed. Now, we know rates can change. We know things can change. So we just want you to know if you're on pace with the median. How about those high performers with the minimum cost of only 7 basis points for the month and 34 basis points below FHLB advance rates? We hope that you are tracking your results and comparing against our scorecard. We want to make sure that you know you have access to this, and if you don't have, or the right person in your organization doesn't have access to this, please contact me now to make sure that we distribute this information to you on a regular monthly basis. So this data tells us kind of where we're at in terms of price and profitability. I hope that you've appreciated this episode of To the Point. We look forward to talking with you at your convenience. You can set up an appointment with me using my Calendly link, and we look forward to presenting again next month another episode of To the Point.